In the previous week, S&P 500 has gained 2.3%, Nasdaq has gained 5.5%, and surprisingly, the Dow Jones gained only 0.2%. And the S&P 500 made an all-time high on Friday, 8th of May at 7401.50. And all of this indicates bullishness in the stock market. But now the Dow Jones is challenging the bullishness. Why it is challenging the bullishness? Because of this trend line. Because again, there are two consecutive failures at the trend line or the rejections from the trend line. If everything is good and is bullish, then why the bubble? For last few months before this, the Middle East war, the analysts were saying that there is a bubble. Now recently there came the news that this investor Michael Burry has said that it feels like the last months of the 1999-2000 bubble. What was that time? That time it was the .com bubble. And this time there is the AI bubble. You can clearly see the formation of the bubble in the Nasdaq. And what about the war in the Middle East? The tech indices are not considering the war in the Middle East at all. For the tech indices, the Middle East war is over. Other than the Middle East war, all of these are negative news in the economy or in the world are not considered at all. Now through the numbers and through the technicals, let me give you a quick idea that why I am saying bullish, but there is a bubble, and why the tech indices are not considering the war, and for the tech indices the war is over. For that you need to understand what happened on Monday. On Monday, there was a red candle of fall. This was supposed to happen that I've discussed in detail in my previous S&P 500 weekly technical analysis. And even in this update, I mentioned that maximum we can expect a fall will be to the 717X range only. That's it. Next day on Tuesday, there was open equal to low condition for no reason at all. And S&P 500 struggled for the entire day to sustain and to remain bullish. And in this, the first update, I mentioned that even if the S&P 500 moves up, then in the best to best case scenario, we will expect 727X only no matter what. Then surprisingly on Wednesday, 6th of May, before the open of the stock market, there came the news that there may be a permanent deal between the US and Iran. So even though there was very heavy bullish movement, more than 1.5% or 2% on Wednesday, but S&P 500 remained within the 7,300 range. And my first update on that day on Wednesday, I mentioned that even if S&P 500 try to move up, then also it will start to struggle from 734X and then can move a little into the 735X with very limited chances of the 736X, and that will be the maximum, the best to best case scenario. And we knew that on 7th of May, S&P 500 will come down. There will be a fall. Why there will be a fall on 7th of May on Thursday? This was because S&P 500 was supposed to come down to fulfill its obligation to the 732X level. And it did. And the low was 7321 on Thursday. So why the S&P 500 will struggle? And even though it is very heavy, then why it cannot come down heavily? Why there will be a limited fall? What will be the numbers in the bullish and the bearish side? All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of May 11th. Means from May 11th, which is Monday, to May 15th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. First part is the technical part. In the technical part, I will show you the technicals, percentage, technical movement, and if there is any change in the technicals or overbought conditions or the saturations, etc. And this will be on the weekly and the daily chart to get a very clear picture. Second part is the probable movement. Probable movement means what is expected to happen in the S&P 500 in the next week. For example, in the previous week, we knew that there will be a fall on Monday no matter what. So in the next week, what will be the bullish condition? What will be the bearish condition? Bullish levels, bearish levels, from where we can expect the fall, from where we can expect the recovery, all of that in this, the second part, the probable movement section. So guys, first I'm going to start with the technical part. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first part of the agenda, means the technical part. And I've divided the technical part into two parts, weekly chart and the daily chart. So first I will discuss the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay. So weekly charts are the long-term charts, means for 2 months, 3 months, means the long-term trend. Daily chart is the short-term chart, short-term picture for 2 days, 4 days, for a week. Okay, that's it through the daily charts. Now let's first analyze the candle of the S&P 500 on the weekly chart. Okay. If you notice, it's a good or heavy bullish candle. Secondly, the closing of the candle is very near to the all-time high of the candle. Okay, this is indicating a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. Okay, means net bullishness through the candle, right? Now let's analyze the candle of the Dow Jones. This is the weekly candle of the Dow Jones. Okay, if you notice the last weekly candle, it's a normal bullish candle. There was a very heavy struggle. The Dow Jones is holding and is kind of creating a consolidation zone. Okay, but this that will all depend on the trend line. Okay, because it cannot move below or cannot test the trend line again and again and then the rejections. Okay, that is not possible. Okay, or that is not technically allowed. So it will have to give a movement either in this side or in this side. Okay, as of now the candle is not indicating anything specific. It is simply indicating an initial or intraday bullish movement on Monday. That's it. So this is in the S&P 500 and in the Dow Jones. Now let's analyze the technical indicators. So as of now it is clear that on Monday, irrespective of anything, there will be an initial or intraday bullish movement. There may even come a gap up open because of the tech indices, the S&P 500 and the Nasdaq. Okay, now let's analyze the technical indicators on the weekly chart. So on the weekly chart, S&P 500 is absolute bullish through all of the technical indicators, moving averages, Bollinger Bands, Ichimoku cloud, and even the MACD and the stochastic RSI. Okay, S&P 500 has hit the initial saturation K equal to 100 in the bull side and is also almost at the saturation divergence and overbought almost. Okay, any more a little bullishness in the next week will trigger this saturation. However, K equal to D equal to 100 through the stochastic RSI is not expected, but there will be 2 consecutive K equal to 100, means there is already the saturation through the stochastic RSI. Okay, when other saturation indicators also hit, then it will become very heavy. But as of now, the S&P 500 is or will be considered as 100% absolute bullish on the weekly chart. 100% absolute bullish, and there is initial saturation through the stochastic RSI, the K equal to 100. Now the Dow Jones is almost the same. Dow Jones is also bullish through the Bollinger Bands, Ichimoku cloud, moving averages on the weekly chart, and is also bullish through the MACD. You can clearly see that there is a bullish crossover. Okay, so there is a bullish MACD. Okay, and Dow Jones is also bullish through the stochastic RSI. Tech indices, they are just moving in a straight line. Okay, this is the Nasdaq. You can see that tech indices are moving in a straight line. There is no curve, no parabolic pattern, no standard stock market movement. Just there is the unidirectional movement in the straight line. This is the reason why the investor, okay, who was famous for his prediction for the 2008 financial crisis. Okay, he has predicted that these are the last month or months. Okay, similar to what we have seen in the 99-2000 dot-com bubble. Okay, but this time this is the AI bubble, and his prediction fits perfectly to the movement that we are seeing in the stock market. This is a non-natural movement. Okay, because stock market is not allowed to work or trade like this, especially the index. The penny stocks, yes, penny stocks, okay, they are always manipulated, but not the premium stocks and not the index. Indexes are never. Okay, this is why if you see the movement in the Nasdaq, okay, this is the weekly chart. Okay, this is the year 2025, this is the year 2026. Okay, what you will notice that even though Nasdaq in 2025 it was moving up, but that time this movement was normal and was realistic. Okay, but this time this movement is not realistic. Now to give you an example, when Nasdaq recovered from the lows, okay, that were in the April 2025, then from April it took how many the months, okay, then it took almost 6-7 months to gain 50% or 58% and to build a new all-time high. Okay, in 6 or 7 months this was the best rally for the Nasdaq. So in 6-7 months it gained 58%. Okay, now if you calculate this, the low from that was in the week of 30th of March, okay, then this high, the current high, the Nasdaq has gained 28%, okay, in how many days? In just 1 month. 1 month 28% gain, and 7 months 58% gain. And we are not talking about a stock, we are talking about an index. That is why he is not the only one who is saying this thing. Okay, but all of these, the hedge fund managers, everyone, they are saying that these are the last month or last months of the or very similar to the dot-com bubble. This is the AI bubble. So why there was this kind of heavy movement? This was because from here the President Trump started to say almost every day that war is going to be over. War will be over soon. War is pretty much over. War will be over soon. War is over. Almost every day he was saying, and then the market was moving up, 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 and up. So this bullish rally is primarily because of that. So there is one more thing that I forgot to discuss in the Nasdaq. Okay, Nasdaq is also 100% absolute bullish, but the Nasdaq is 100% absolutely saturated and has hit the overbought condition on the weekly chart. So Nasdaq is now very heavy. It is very heavy. And without manipulation, without external support, Nasdaq cannot sustain at all. And it is highly and heavily susceptible to fall, to come down under its own weight. So this means that bullishness is still allowed, but this bullishness is conditional. Now, how soon we can expect the S&P 500 to come down? Okay, or for how long it can sustain in the bull side? Okay, so this will be more clear through the daily charts, because daily charts will show the short-term picture. Okay, for a week or so. Okay, so let's move on to the daily chart to see, okay, what is expected to happen on Monday, Tuesday, Wednesday, etc. The short-term picture. So guys, now this is the daily chart. Okay, daily chart means one candle represents one day, not 1 week or 1 hour. So now let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And for the daily precise updates of the S&P 500 and Dow Jones, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, this is the last candle formed on 8th of May, Friday. The closing of the candle is approximately equal to the high of the candle. Secondly, this candle was responsible for the all-time high level, because this candle has formed an all-time high at 7401.50. Okay. So based on these conditions, the S&P 500 is expected to give or to get a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. Okay, exactly the similar condition we have seen on the weekly chart, a gap up open or an initial or intraday bullish movement on Monday. Now, this is the Dow Jones. This is the last daily candle of the Dow Jones. Okay. Now, if you notice, the open and the closing of the Dow Jones on Friday, 8th of May, okay, are below the 50% of the candle itself, indicating bearish pressure. Okay, although the candle is bullish, means a green in nature, but because open and closing are below the 50% of the candle, okay, there is no good body or no heavy body. Secondly, this candle was the second successive candle that closed below the trend line. Okay, this indicates an initial or intraday bearish movement on Monday. Okay, this does not confirm a gap down open. Initial or intraday bearish movement on Monday. See, as such, because of the trend line rejection failure, there must come a gap down open. Okay, this is technically okay what happens, but because of the condition in the S&P 500, which is expected to get a gap up, okay, or irrespective of anything, initial or intraday bullish movement, Dow Jones may not give a gap down open. Okay, but irrespective of anything, there will be an initial or intraday bearish movement on Monday. Next week is expected to be very, very decisive, very, very confusing, and very, very interesting. So that I'll discuss in the next part, the probable movement section. Okay. So as of now, Dow Jones is the only index that is indicating the bearishness, okay, through the candle. So considering all of these factors, it is clear that on Monday, irrespective of anything, there will be an initial or intraday bullish movement, okay, through the weekly and the daily charts. Okay, initial or intraday bullish movement, or there may come even a gap up open, but because of the rejection in the Dow Jones, there will be bearish pressure. Means even if there comes a gap up open, then also it will fall. Okay, if there comes a gap down open, then also it will come down a little. Okay, then it can sustain based because of its own conditions. Okay, but then this will be the case. Okay, means irrespective of anything, even if there are all bullish conditions, the Dow Jones's only bearish condition can trigger a fall, intraday fall, okay, and a struggle in the bull side, right? Now, this will be more clear through the technical indicators. So let's analyze the technical indicators on the daily chart. S&P 500 as such, there is nothing bad. S&P 500 is absolute bullish through the moving averages, Bollinger Bands, and the Ichimoku cloud on the daily chart. Furthermore, S&P 500 is also bullish through the MACD and the stochastic RSI, okay, on the daily chart. S&P 500 is saturated, okay, and overbought condition is there and the divergence is there, okay. So S&P 500 on the daily chart is heavy, okay. It is 100% bullish, absolute bullish, means the just like the long-term trend through the weekly chart, long-term trend was 100% bullish. Similarly, through the daily chart, short-term trend is 100% bullish. 100% bullish trend, okay. But yes, saturation overbought condition is seen in the S&P 500. Now comes the most interesting thing here, that is in the Dow Jones, okay. So technically there is a change in the Dow Jones, okay. Dow Jones is bullish through the Bollinger Bands, moving averages, and the Ichimoku cloud on the daily chart, okay, no problem. Dow Jones is even bullish through the stochastic RSI, no problem. No saturation, nothing, fine. Now, look carefully here. This is the MACD of the Dow Jones. MACD means moving average convergence divergence. So, okay, based on the means considering the percentage wise, Dow Jones is 75% bullish on the daily chart. S&P 500 is absolute bullish on the weekly and the daily chart. Dow Jones is 100% bullish on the weekly chart, but is 75% bullish on the daily chart. Okay, this is a problem. This is indicating initial weakness, the saturation weakness, okay, or the index or the market is tired. That condition. Okay, this is what we are seeing through the movement of the Dow Jones, right? Nasdaq as such, it is not necessary, but one thing that I want to show you in the Nasdaq is 100% absolute bullish, no problem. Okay, Nasdaq is 100% absolute saturated, 100% absolute divergence, 100% absolute overbought. Okay, this is what is there in the Nasdaq, right? So this means that if an index has to give up, or when there comes a fall in the entire stock market, okay, it will be the Nasdaq that is going to lose the most, as usual, always. Okay, means Dow Jones, if Dow Jones loses 1%, S&P 500 will lose 2%, Nasdaq will lose 3, 4 or 5%. So now let's discuss the problem. Okay, means problem created by the Dow Jones last week also. Okay, Dow Jones was the only index that was putting pressure on the S&P 500, was creating problem to the S&P 500. Okay, so first problem that we have seen here is the rejection, 2 consecutive rejection, just like what we have seen here and here. Okay, because of these two consecutive rejections, what we have seen on Monday, heavy fall in the Dow Jones. Okay, this was very much known. This is what I have confirmed in my previous weekly S&P 500 technical analysis, that on Monday, irrespective of anything, there will be the fall, there will be the pressure, there will be the fall or heavy chances of the red candle. Okay, and it was there. And why was that? Because not because of the S&P 500, not because of the Nasdaq, it was because of the Dow Jones. Okay, because Dow Jones is the prime index of the US stock market, right? Now, there are again two consecutive rejections, okay, in this in the Dow Jones. Furthermore, to make the matter worse, what happened here is the MACD of the Dow Jones. Now, last week when there were two rejections from the trend line, that time MACD was bullish. Look into the picture, MACD was bullish. Okay, even when MACD was bullish, we have seen a fall on Monday because of that rejection from the trend line. Now, in the current case, okay, if you notice carefully, there are again two rejections, continuous successive rejections through the trend line. Now the MACD of the Dow Jones is bearish. Okay, it is bearish. So now there are two bearish factors. This means that on Monday there will be heavy chances of the fall, formation of the red candle. And it's not just limited to the Dow Jones, okay, because this is happening in the Dow Jones. So the same will be seen in the S&P 500 and the Nasdaq. There will be an exception that I will discuss in the next part. Okay. Furthermore, one more thing that we can see here. If you have technical knowledge, then you can clearly see. This is the linear movement of the MACD. Very, very fair, very clear. Okay. Very linear movement. Means if it goes bearish, then it remains bearish for many days, weeks or months. Okay, if it goes bullish, it remains bullish for many days, weeks or months. Okay, now in the current case, what is happening? Okay, here you can notice that because of this heavy fall on Monday, 4th of May, we have seen the fall here, a bearish crossover in the MACD. Next day there was limited bullish movement on Tuesday, again a bearish crossover. Next day there was the heavy bullish Wednesday, okay, 2% bullish movement in the tech indices, okay, S&P 500, etc. Heavy bullish movement, again a change in the MACD, bullish crossover. Then again a fall on Thursday, then again bearish crossover. Finally on Friday a bearish crossover. Okay, so what does this indicate? This indicates a potential change, a change in the MACD. Means it always gives a linear movement, very linear movement, but now it is not giving that linear movement. There is a struggle. This indicates the struggle, this zigzag, okay, sometimes bullish crossover, bearish crossover. This indicates a struggle. Okay, why the struggle? The struggle is because as such it was supposed to remain and trade bearish. Okay, but because the market movers, the market manipulators don't want to create any bearish situation, that is why they are going against the technicals. They are forcing, okay, they are forcing the technicals to remain bullish. They are trying it again and again, but still they have failed 1, 2, 3 times. Okay, yet they can force the MACD to change to bullish, okay, on Monday. But for that to happen, the Dow Jones must give a heavy bullish movement on Monday, more than 1.5% or so, heavy bullish movement on Monday. Otherwise there will be this the very clear MACD. It is already bearish, okay, then it will start to form, you know, this kind of, means this the MACD and its signal will then move, okay, clearly, and we will see the clear bearish crossover. So this is how through the technicals, okay, we can see or we can understand whether there is the manipulation or manipulative movement or not, or what is happening. Okay, why they are the market movers, the market manipulators, they are forcing the technicals. Okay, why there is so much of a struggle. In the recent times also, I've shown you this kind of struggle, and eventually we have seen this the heavy fall. This was there before 28th of February when the war started. Exactly the same kind of situation, because that time the market movers, market manipulators knew that there will be the war. Okay, and probably they might even knew when exactly the day and the date it will happen. So we have seen this kind of condition struggle at that time also, heavy manipulation, but eventually it gave up, and then we have seen the fall in the first in the entire month of March. Okay, this means that Monday, okay, we are expecting this the fall. Okay, there will be an exception, but otherwise there will be a fall. Bullish side, there will be the struggle. Okay, why? Because of the Dow Jones. Furthermore, there is no change in this the bubble. Okay, bubble we are seeing from 2025. Okay, this is 2026. Okay, yes, there is one more thing. What happened when this the bubble burst in 2000, in the year 2000? Okay, there is very interesting movement in the Nasdaq, not in the S&P 500, Dow Jones, Nasdaq, because Nasdaq lost almost 80% of its value. Okay, how much? Almost 80% of its value in the year 2000, whereas S&P 500 lost only around 60%. Okay, Dow Jones was around 50%. Okay, at that time in the year 2000 when the bubble burst. Okay, when the housing market bubble, okay, it burst in 2008. Okay, that time there was not that kind of heavy fall. S&P 500 lost, I think, 56 or 57%. Nasdaq lost 72 or 73%. Okay, so whenever the bubble burst, okay, 60-70% fall in the index is normal. But the good thing is that when this cycle, bubble burst cycle, is complete and the index comes to the recovery, then there is very heavy bullish recovery. That is the good time. Okay, means the lows, the dips, okay, to enter, and then there will be a heavy recovery for a few months, for a few years. Very sharp and heavy recovery in the indices. But guys, no matter what is happening in the stock market, okay, I will keep you posted. I will keep you updated every day from Monday through Friday through these the daily precise updates of the S&P 500, Dow Jones and Nasdaq that I give to my Patreon community members every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday. I give the pre-market analysis before the open of the stock market. Then I give the first update when the first hourly candle forms. Then I give the midday update after 3 hours. Then I give the final update 2 hours before the closing of the stock market. In this manner, my Patreon community members are very well aware of what is happening in the stock market, in the indices every day. What are the support levels? What are the resistance levels? Maximum to what level index can move up? When it comes down, then what will handle the fall? Whether there is a buy opportunity, okay, or sell opportunity, means everything. And guys, that's not all, because I also give the opportunities in the premium stocks. Top 30-40 companies of the US stock market. I gave up to 50 opportunities in these the premium stocks with the explicit levels, numbers, okay, all of the percentage wise, everything. And guys, that's not all, because I also give the mid-week update, and it's a video technical analysis that I give to my Patreon community members every Wednesday. Okay, it's a video technical analysis. I discuss all of the movement, bullish, bearish movement conditions with the precise numbers, levels, zones, everything. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile, and here you will see this button that says membership options. And when you click on this button that says membership options, then you will see these three levels: level 1, level 2 and level 3. Okay, level 1 is S&P 500 updates, level 2 is S&P 500 updates and opportunities, level 3 is the premium level. Through this level, you will get all midweek update videos, daily precise movements, okay, the daily updates, premium opportunities up to 50 or more, okay. Then there will be a Zoom video meeting of 2 hours. Through this Zoom video meeting, I will teach you, I will tell you one premium strategy, okay, with very high accuracy, one premium hack with very high accuracy, and one premium technical indicator, okay, with the modified values and that is also with very high accuracy. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years. and they are getting these daily precise updates every day from Monday through Friday. Levels, numbers, zones, movement, bullish, bearish movement, conditions, everything, and the opportunities in the premium stocks and the midweek update, video technical analysis. So guys, whenever you want to get all of these, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. Probable movement means what is expected to happen in the S&P 500, Dow Jones, Nasdaq, okay, the movement, the levels, numbers, zones, okay, everything. Means from May 11th, which is Monday, to May 15th, that will be Friday. So whatever is expected to happen, okay, in the next week, Monday to Friday, that I am going to discuss here. Now, first thing first, okay, the economic data. Economic data next week on Tuesday, the CPI, the inflation data will be released. However, the Wall Street or the stock market may not accept the data if it is negative. On this day, the economic factors, okay, were bearish. Oil was trading and holding above $100, okay. Other than that, the Michigan consumer sentiments data, okay, this was the lowest in its history in last 80 years. Okay, this is the second time. Last month that was, I think, 49.4 or 49.2. This time it is 48.2. So now let's discuss the numbers, levels, okay, and all of these. Numbers, levels, okay. So what we have seen, what I have discussed in the previous section, in the technical part section on the weekly and the daily chart, okay. On the daily chart, I've shown you that how the impact, two consecutive rejections, okay, especially when the MACD is bearish. There were two consecutive rejections. That time MACD was bullish, but still we have seen the fall. Okay, that is why two consecutive rejections and a bearish MACD means a fall or a red candle highly likely on Monday. Okay, furthermore, I have also shown you the struggle in the MACD, that market movers, market manipulators are trying to keep the market inflated, okay, at these the levels, at the peak. This is why we are seeing the struggle here through the MACD, because MACD is known for its linear movement. Whether it's bullish or bearish, it is always linear. Okay, Monday will be very decisive, because if on Monday there comes a red candle, then it will fan out. In that case, it will be very difficult to trigger a bullishness in the Dow Jones, in the Dow Jones, okay, or to change the MACD Tuesday or Tuesday onwards. Okay, so Monday, yes, we can expect some manipulation. Okay, already it is already happening, okay, almost every day. But Monday, why? Especially to help the Dow Jones or to change the status of the MACD from bearish to bullish. But if that does not happen, in that case, we will see more pressure and the fall. Now, in case of the S&P 500, okay, how this is going to work? Okay, for that you need to understand that this is NVIDIA. This is Nasdaq. Okay, Nasdaq has gained 2.35% on this the Friday, right? Now, what we have seen here, that Nasdaq, through the technicals I have shown you in the last section, through the technicals I have shown you all of this, that it is very heavy, overbought, saturated, okay, all of these are conditions. If Nasdaq moves just 1 point higher, okay, then on the weekly chart it will hit the absolute saturation, K equal to D equal to 100. So now let's focus on the movement, the technical movement. What does this mean? This means that if the S&P 500 try to move up, okay, technically through the candles and the closings, okay, S&P 500 is in a condition to move up or to even give a gap up open, whereas Dow Jones will put the bearish pressure, downward pressure, and Dow Jones is indicating a gap down open, or irrespective of anything, an initial or intraday bearish movement on Monday. Okay, all of this indicates that if S&P 500 try to move up, okay, then it will struggle, okay, well before the 7450 half mark, okay, in the 7400 range. It will struggle below 7450, okay, it will struggle very heavily to sustain, okay, in the 7400, okay. And if the Dow Jones here, okay, once again the trend line will come into the picture. here, if the Dow Jones struggles, to clear the trend line, let's say there comes a gap down open in the Dow Jones, it try to move up but it fails to test the trend line, or test the trend line but fails and comes down, okay, remains below. In that case, S&P 500 will not be able to sustain in the 7,400 range. After some bullish movement, after giving a limited bullish movement, it will have to come down, it will have to fall back. Now when I say fall back, okay, when it try to come down, then also there will be struggle. Why there will be struggle? When the index is already very heavy, saturated, okay, overbought, why it will struggle, okay, when it comes down? Because of the Dow Jones. Why because of the Dow Jones? Because of the MACD of the Dow Jones. Because the market movers, the market manipulators, okay, they do not want the technicals to change as of now. That is why we have seen this heavy struggle through the MACD. Okay, bullish crossover, bearish crossover, bullish, then bearish crossover. This indicates struggle, very heavy struggle to keep, or to help, or simply to keep the Dow Jones in a bullish state. Okay, because when the Dow Jones comes under pressure, then it will come down. When Dow Jones comes down, in that case, market movers, market manipulators, they cannot continue to push the tech indices up. They will have to start profit booking. They will have to bring it down. I'm not saying very heavily down, okay, means that's a sequential down. Okay, they will then simply bring it down. Okay, so that will be the case in there. Now there is one more thing. As of now, okay, at the time of recording this the video, okay, this the technical analysis, there is still no information, no confirmation from the Iran side on the peace proposal submitted by the US. Okay, the president has said that there will be a confirmation from Iran, okay, by Thursday. It was not there. Then he said that there will be a confirmation from Iran by Friday. It was not there. Today is Saturday. He said that now it will be on Saturday. It is not there. Okay. So if there comes no confirmation from Iran, okay, in that case market can try to sustain. But if there comes a confirmation, if it is good that Iran agrees to the peace proposal, okay, in that case market can try to move up, okay, and can even try to sustain in this the bullish state. Okay, but again that bullish movement will still be limited. It will not be very heavy. Okay, why it will be limited? Because all of this, the bullish movement you are seeing, all of this, the heavy bullishness, this 28% gain in the Nasdaq in 1 month you are seeing, it is based on the comments of the president and based on the speculation expectations that the war is over. War is almost over. War will be over soon. War is pretty much over. It was based on all of these the conditions. So once the war is actually over, okay, in that case, this is what the market has already priced in all of these the condition that the war is over. Now when the war is actually over, then the people will think, the retail traders will think that the war is over. Now it should continue to move up. No, in that case it will come under the profit booking. So but technically, okay, so 7,450, it is expected to remain below that. Okay, highly likely, okay, it is expected to trade under pressure, and we can expect a red candle on Monday. This will be cancelled. The fall or the bearish pressure will be cancelled if there comes open equal to low condition. Why and how the open equal to low condition will be? If there comes comments from the President Trump and he says that there will be peace deal, okay, or war will be over soon, or there will be a permanent ceasefire, okay, similar to what he is saying for last 1 month or more than 1 month, okay, the same comments that can trigger, okay, some more bullishness, although that bullishness will not be heavy, okay, but at least the index will be in a condition to sustain and not to give up, okay, especially if there is open equal to low condition, then no fall, okay, or the fall will remain very limited intraday but will not breach the open price. Now the bullish movement, okay, if all goes well, in that case 7,400 in the S&P 500, then it moves to the 7,500. Now in the starting in the beginning of this video I mentioned 7,500, 7,600. It may not happen in the next week, means the week of May 11th. Why? Okay, there are many reasons. The best case scenario for the S&P 500 for the year 2026 is 7,600 as per the Goldman Sachs, as per the analyst. Okay, This is by the end of year 2026, the maximum S&P 500 can gain is 7,600, right? Now, if we start to calculate the 7,600 from this, the last closing of 7,398, okay, in that case, you will notice that the 7,600 is only how much? 2.75%. 2.75%. Okay. So the best to best case scenario for the S&P 500 predicted by the banks, hedge funds and the Goldman Sachs, etc. Okay, it is only 2.75% from the current levels, and we are in the month of May, early May. They are saying that by the end of 2026, maximum it can gain is 7,600. Okay, it is very near 2.75% from here. Within one day it can gain. Okay, so that's not a big deal. Other than that, okay, this means that as of now the market is already under pressure, okay, because it is reaching to the expected high as discussed or as predicted by, okay, earlier this number was before the war started, okay, the number was 7,100 or 7,200 before the war started, okay, that this will be the best case scenario. And that time S&P 500, okay, it was holding in the 6,800 or 6,700. Okay, that time it was more practical that it has come down, holding, will move up, okay, and in this manner it will cover. But now it is already very much up. So they have revised the target from 7,100 or 7,200 to the 7,600. Okay, so this is one reason why the market will now show hesitation. Now, other than that, the S&P 500 has overstretched and has overshot. Okay, this is very much clear in the Nasdaq. Okay, Nasdaq is trading way beyond its technicals. Okay, this means that there is not much room in the bull side. Okay, it has to drop. Even if it initially moves up, then also it will have to drop. Okay, why to drop? To fulfill the pending obligations. So this means that in the next week, S&P 500 is expected to remain within the 7,400 with very limited chances of the 7,500. Okay. Otherwise, within the 7,400, it will move up and then it will collapse. It will come down, give up. Okay. But for that to happen, the Dow Jones must support. Because if the Dow Jones is trading bearish, okay, and the tech indices keeps on moving up, in that case, it may not happen. One more thing, there is a surprising fact. If the Dow Jones is moving up, sustaining above the trend line, there are two consecutive closings above the trend line. In that case, Dow Jones will be in a condition to move to the 49,000, 50,520 or so. That was its all-time high. Okay, and in that case, what we will see? We will see the selling in the tech indices. What will happen then? There will be profit booking in the tech indices. Okay, they will, the big ones, the big players, they will take the money out from the tech indices, S&P 500 and Nasdaq. They will pump that money in the Dow Jones and will have the Dow Jones to move up to hit its all-time high and to make a new all-time high. So we will see a counter movement. Okay, very similar to what we have seen on Friday when Dow Jones was flat. Okay, S&P 500 gained almost 1% and Nasdaq gained 2.35%. Okay, so similarly we will see a counter movement. But yes, one thing is very much clear. If Dow Jones is not holding, not trading above, not sustaining above, not closing above the trend line, then the tech indices cannot sustain bullish. Okay, they cannot sustain bullish, right? This means that the bullish side is now clear. Bullish side will remain limited, irrespective of anything, any facts or anything, it will remain. Okay, this thing. Even if there comes a news that the war is over, Iran has accepted the proposal, okay, war is now over, we may see a good gap up open, then a kind of open equal to low condition, it try to move up, okay, in the 7,400 range, and then it fall. Okay, either the same day or the next day, it will form a bearish condition, then the profit booking will start. Okay, why? Again, the same reason. This rally was based on the condition, based on this the speculation that the war is over, war is going to be over soon, war is pretty much over, means the daily comments from the president. Okay, when the war is actually over, then the profit booking will start. Now, how the profit booking will happen, okay, or if not the profit booking, then how the bearish side will work. Okay, bullish side 7,400 range with very limited chances of the 7,500, otherwise 7,400. Bullish side is clear. Okay, on Monday, if there comes, but guys, yes, before I discuss the bearish case, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now Monday will be very important. Okay, why? Because of the Dow Jones. Whether it happens on Monday or Tuesday or any day, when the S&P 500 comes down, okay, in that case, S&P 500 will have to breach and to lose the 736x level, not the low of this candle, no, the 736x level. So S&P 500 will have to breach, okay, and on the hourly basis. After it breaches the 736x, it will have to lose the 736x, means the hourly closings must be below 736x. At least 2 consecutive hourly closings, okay, below 736x level, in order to confirm that now the bullish side will be limited and restricted and there will be more fall. More fall to what? Exactly to the level that was on this day, Thursday, 7th of May. What happened on 7th of May? On 7th of May, Thursday, we knew that there will be a fall. This is what we knew. Why there will be a fall? Because there is a level in the 732x to test and to fulfill its obligation to the 732x level, there will be the fall. That is why when it comes down, then the 732x level will hold the fall. Okay, this is the last known support in the bull side. Because when the 732x is lost, there comes continuous hourly closings below the 732x. Okay, then the profit booking will start. Means a fall from the current level to the 732x will be a normal fall, no profit booking, just a normal fall. Okay, regular intraday fall. Below 732x, the profit booking will start. Okay, now how the profit booking will start? Okay, for that, what will happen? When the S&P 500 comes down, okay, then it will lose the 7,300 psychological mark. After losing the 7,300 psychological mark, then it will come down to breach the open price of this candle or the low price of this candle, that was 7294.14. Okay, it will breach then this price. Okay, now breach is not enough. We need at least 1 hourly closing below the 7294.14 to trigger more fall or to trigger heavy profit booking. Okay, so when this profit booking start, means see, there will still be chances for the revival. There will still be the chances for the revival if it has come down, breached this the low, okay, holding, and the hourly closings are still above the 7294. Hourly closings are above the 7294.14. Okay, there will still be the chances of the revival. Revival of what? Revival of the 7,300 psychological mark. Because once again, the rally that we are seeing here, okay, the AI bubble that we are seeing here, okay, the market movers, the market manipulators will not let the bubble burst, okay, like within a day or within, so they will not let it happen. Okay, before this can happen, they will accumulate the volume. How they will accumulate the volume? There will be a fall. Okay, now technically when there will be a fall, then it will come into a condition to give bearish movement. This is the technical movement. Now what the traders will think, that now the technical movement is there, okay, now it should continue its bearish movement. All of a sudden they will push it up. The market manipulators, they will push the market up. Okay, then they will create another FOMO, okay, or the speculation that no matter what, the market will remain, the S&P 500, Dow Jones, Nasdaq, the entire US stock market will remain bullish no matter what. Okay, then again bullish movement, then one day, okay, some fall, limited profit booking, then again push. Okay, so they will not let it happen. They will not let the market come down, okay, and there's the heavy profit booking. They will keep on booking their profits, okay, slowly, because the problem with the market manipulators is the volume. Okay, this is the weakness of the market manipulators, the volume. Okay, so they need to accumulate the volume. And how they will accumulate the volume? Once they have convinced everyone, every last person who is trading in the stock market, once they have convinced that there will be no fall, it will move up, 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 up. Okay, and then people are buying. They are using their credit cards, they are getting loan, and they are buying. Okay, so once there is enough volume, then we will see the profit booking, and then only they will start to book their profits and the heavy fall. That is why I'm saying there will be the chances of the revival of the 7,300 as long as S&P 500 is not holding, not closing below the 7294.14. Okay, below that there is my level, okay, in the 7 to 8x. Okay, so that level, even if it has lost the 7294, but it has sustained at the 7 to 8x, then also it will be in a condition, it will be in a state of revival, means to recover the 7,300 and to trade within the 7,300. Okay, and under certain conditions to even move back into the 7,400. Okay, so like I'm saying, this kind of movement, okay, moves up, comes down, okay, sustains, holds, moves up, okay, then comes down. This kind of movement. Okay, so it will be there. Now the profit booking will accelerate. So what I mentioned here is that below 732x, that is my calculated level that I've discussed here. Okay, this is the first update on Thursday also, that 100% it will come down to fulfill its technical obligation. So below 732x, there will be the profit booking. The profit booking will start. Okay, but this profit booking will not be heavy. This profit booking will be limited. Profit booking will accelerate once the S&P 500 loses the 7 to 8x level. Okay, after losing this, it loses the 7 to 8x level. Okay, closes below this level, continuous hourly closings are below, then the profit booking will accelerate. Now when the profit booking will accelerate, then where it will be coming down to? Now it will be coming down to the 7 to 2x level. This is the heavy support for the S&P 500. Before the 722x, okay, there is one more level in the 7,000 range, but eventually, okay, it will find support for 1 day, for 4 hours or 1 day at that level, but eventually it will be coming down to the 722x once it has lost these, okay, the levels, okay, these are zones, then it will have to come down to the 722x no matter what. Okay, now when it comes down to the 722x, then immediately after 722x there comes a 7,200 psychological mark. On Monday, on 4th of May, what we have seen here, the closing was 7,200.76. This was the closing. Only by 76 cents, okay, the market movers managed to save the S&P 500. Okay, it sustained and closed above the 7,200 psychological mark. That is why there is a very heavy zone, okay, from 7,200 to the 722x, very heavy support zone. Even if the fall accelerates, it comes down, okay, from here there is 2 or 3% fall, then also it will hold and sustain. Even if there is the bad news, double bad news, worst news, then also it will sustain. Why? Because it has to. Okay, now what will happen once it sustains here? Once it sustains here in that, then after that, okay, we will see a recovery. We will see, okay, this is the fall, then the recovery. Recovery back to what? Recovery back to the 7,300, but to the 732x only. Okay, limited recovery in the 7,300. And then by the time it comes down, okay, this kind of movement is there, okay, this kind of fall and this the kind of curve, the technicals will change. Okay, what will change first? First the MACD will change, then at the even before that stochastic RSI will change. Okay, so once the technicals change, okay, this means that this the bullish recovery we are seeing here, okay, it was coming down, and now this bullish recovery we are seeing here, this will be limited, this will be restricted, and then because of the technicals it will have to come down, it will have to fall. Okay, this fall may not be very heavy, this fall may be sequential. Secondly, a fall from here to here to 7,300, it may take 1 to 3 days, because it has to come down to lose 2.75%. So it may take 1, 2, 3, 4 days or the entire week. It depends on the news, okay, and the other factors. Tuesday, okay, we will see the inflation data, what is happening to the inflation. That will also, okay, affect and impact the movement of the market. But as of now, up to the 7,200, then it will trade in between the 7,400 range, okay, or not in between, okay, means in this manner what we can say here is that for the next week the S&P 500 will trade in between the 7,400 range and the 7,200 range. Okay, there are tiebreakers. Tiebreakers are the 7.3, not R, but there is only one tiebreaker, 732X level. Okay, then comes the 7,300. These are the tiebreakers. Okay, or this is the only tiebreaker. Okay, there is one more level that will also act as the tiebreaker, and that will tell us, okay, how soon it will lose the 732X, or once it has lost the 732X, then how soon it will hit the 7,200 or the 7,202X level. Okay, that will tell us the momentum. Okay, how soon, like within 1 hour, 4 hour, 1 day, 2 day, how soon. Okay, this is what I discuss in the pre-market analysis every day. Okay, that how to learn or how to see the momentum, okay, in the bull and the bearish side. Because if the momentum is heavy in the bull side, okay, then there will be heavy push, bullish movement. If it is heavy in the bearish side, then fall. If the momentum is very dull in the bearish side, then will remain and hold and close bullish. Okay, like that kind of condition. Okay, if it is forced to lose, then it will enter into the 7,100 range. Okay, now there is a heavy cushion in the 7,100 range. Okay, from the 708X to the 712X or 713X. Okay, there is the zone. Whenever it comes down, then I will mention the zone explicitly. Okay, what is that the exact zone? Because after losing the 7,200, it will fall to the zone. Okay, now it will come down, it will hold here. Even if there is the news that is very negative, there is the worst, okay, there is war, means whatever, consider the worst to worst case scenario, then also it will come and it will hold here. Okay, in the 7,100 or in the 7,000 range, it is not going to lose the 7,000 psychological mark. It will hold here. Okay, and then it will take just one more last bullish step. Means it has moved up, it has come down, it has held, and then it has moved up again. Okay, this time this movement will not be for the bullish movement, bullish direction or so on. This will be for to accumulate the volume. Okay, and then we will see this kind of movement, the fall. Okay, then the short-term bearish cycle will start, but the long-term bullish cycle will remain as is. There will be no change in the long-term bullish trend. Long-term bullish trend will remain as is. Only the short-term trend will change, first from bullish to neutral, then from neutral to bearish. Okay, so a fall from here to here is not the change of trend from bullish to bearish. It is the change of trend from bullish to neutral. Okay, then it sustains here. Okay, then the technical change, then only it will change to bearish. But for that to happen, okay, many days of the fall, okay, or the bearish side movement is required. So guys, Monday will be very, very crucial, very, very important. Okay, and Monday, okay, in the pre-market analysis, okay, then the first update and through the midday update and all of the updates on Monday, it will be very much clear where the S&P 500, Nasdaq and Dow Jones, okay, are going to trade. Means the levels for the entire week, for the rest of the week, if the bullishness will continue or the bearishness will be there. So that I will mention, okay, in these the updates on Monday, pre-market analysis, etc. Okay, and it will be very, very much clear on that day. So if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. And guys, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.